Namaskar. Hello and welcome to P Guru's channel. I'm your host Sree Iyer. Joining me is Sridhar Chityala ji, and we have some very interesting news. De-dollarization, is it dead? That's the question we're going to try and answer. Let's welcome Sridhar Chityala ji. Namaskar sir, how are you?
Namaskar ji, doing very well. I am always enlightened, illuminated, as well as very impressed by the rainbow colors and the types of shirts that you come up with. It's fascinating. So we have to comment on all the shirts and the music that goes with it, Sriji.
Thank you so much, sir. We are going to jump right in, viewers, on a very important slide deck because this is a tectonic shift in terms of how Russia is doing its trade deals now. And we have a small slide deck. Sridhar ji has put many hours to put this thing. A small request from all of you to please like this video, and we will be pausing somewhere in the middle to give you an ad. The Sengols with enclosures are ready for you. They are in stock. You can place your orders now. Let's go over to Sridhar ji. Over to you, sir.
Okay, thank you. Okay, so the question, I think Sree ji set the context, which is, are we back to ruble-dollar trade, and is something cooking between United States and Russia? I think that's the question that we're trying to answer. And then also, this whole notion behind, this big Russia-China BRICS trade and the whole migration away from the dollar and the consequences of it to the world markets. We'll try to show the data, and you can draw your own conclusions as to how active media and little data drives a very different agenda relative to the reality. And we also will answer the question, hence Russia says we need to go back to work with the United States and see how we can rekindle the ruble-dollar trade or the dollar trade. Next, slide 1. Okay, what is the current composition of Russian trade? It's very important to understand. Basically, it is driven by three or two, obviously minerals, fuels, and oil, which contribute close to 65-66% of its economy, and the 26%, other 26-27% is from the manufacturing side. But the major export is in the minerals, fuels, and oils. Commodities, they are a significant exporter of coal, fertilizers, and wheat. Remember, India has a big deal with Russia. India has also a big deal with China. Precious metals and stones, gold, and traditionally diamonds also is part of it. Iron and steel, and now slowly rare earths is coming into the picture. Next. Okay, major export destinations. There should be no surprise. The largest partner is 40% of Russia's trade is China. We have covered this. Another major buyer is India of the crude oil. And you have seen a lot of press coverage, whether it is additional oil, current oil, that India is going to rebalance its imports, etc. The fact is that India will continue to import oil from Russia at a price that it commands a premium price. Turkey is another major player. When the world shifted from EU, which was the other major export destination for Russia, China, India, and Turkey kind of filled the gap. Turkey is a very big buyer. EU still buys, notwithstanding all these myths, they still buy LNG from Russia. United States failed to deliver. This transition tried to happen during Biden time, didn't happen, hasn't happened during Trump time. So still EU, despite all its lectures, buys LNG from Russia. Next. Okay, import composition and partners. Where do, obviously Russia needs imports, heavily weighted towards capital goods, namely machinery and specialized equipment, automobiles, and electronics. Most of it comes from China. Partners are China is a leading supplier, believe it or not, followed by Turkey and other non-sanctioned nations, mostly Central Asia and Belarus, who make up the import composition. Now let's go and look at the volume. Next slide. Next slide.
Sir, it's already there, sir. We have changed to the next
slide. It's a long-term trade surplus largely driven by energy exports and shift to east. I think we have covered this point, which is namely it moved away from EU towards China, India, and Turkey. following the 2020 sanctions. I think we repeatedly pointed this data to you. The energy exports to India moved from about $9 billion to about $65 billion. And then, of course, to China, $140 billion, and Turkey close to $30 billion, which is what we will show in the next slide. Yeah. Okay. The whole notion of Russian de-dollarization is a myth perpetuated with sanctions. Why is it a myth? Because most of the deal that export deal that Russia was doing was with China, and China doesn't do dollar trade. China does most of it in ruble. A central bank ruble position was created, and a lot of rubles sat in the Bank of China, and they also created a trading opportunity for those importers to buy ruble in the Bank of China so that they can import stuff from Russia, but as well as export their into China. So the estimated, $417 billion is the export volume from Russia. 63% or 65% is minerals, oils, fuels, and minerals, and about 10% at metals, machinery, and other products, making up 8%. Imports is about $295 billion. I think we covered this in terms of the data. So China maintains a trade surplus which is close to $130 billion. It's a significant amount of trade surplus which powers its kind of economy. So when people say that they are de-dollarization, look at the trade composition of a very major economy or three major economies participating. So effectively, there is no justification for any of these three nations to do trades in dollar. But where is the dollar requirement for Russia, especially accessing the capital markets? It is mitigated. There are no capital markets to raise money in India or China, necessarily the capital markets in terms of raising money with their assets is in Western Europe or in United States. And why do they need to raise capital? They need to raise capital to fund a large capital expansion programs, which not necessarily they are funding through exports. So which is the reason why they have been starved of access to that capital. And second important point is that in its own way, because of trade sanctions, the ruble creates currency non-stability or currency fluctuations, which creates problems again in terms of Russian renminbi is pegged to dollar. When I say pegged to dollar, the base currency rate renminbi is for dollar, and same for India as far as renminbi is concerned, or the regional currencies. So therefore, there are issues for Russia in terms of doing non-dollar trade and sustain it the way they have sustained, creating challenges for itself. Next slide. So China, the largest, I think we have covered this, 130 billion. India is 66 billion, and Turkey is 26. Basically, these three guys make up the bulk of the stuff that Russia sells to three countries. And the import side, China is the primary with about 114 billion. Belarus is the second with 19 billion, and then you have Turkey and others, doing imports into Russia. Obviously, I think we covered Russia enjoys a trade surplus of about $135 billion. Next slide. So what prompted...
1 second, sir. 1 second, sir. Go back to the previous slide, please. I have a question. Sir, exports to China is 130 billion. Imports from China is 113 billion. That means they have a surplus of 17 billion with China, don't they?
Correct. Okay. They have a trade surplus of 17 billion. What China is saying is that you don't have a market, so we will create a ruble currency trading capability in Bank of China, and that gives you the opportunity for my buyers who want ruble to buy ruble in Bank of China for exports, and also you can pay in ruble. You can pay in you can also do imports. So the question therefore here is that in the absence of market access for capital, at the moment, the ruble trade happens in either in Russian central bank or happens in the Bank of China central bank. And this is the only access to market capital because of the size of volume that these two nations, are trading in. So you take a look, 130 plus 113 is almost close to $243 billion of bilateral trade between these two nations, just these two nations, okay, Russia and China. Okay, then you have, it's also trade surpluses, as I mentioned to you, 135 billion, which has been powering its economy. Now, three factors are affecting Russia's economy. One is obviously low growth, 1%. It is now having a high inflation due to war, somewhere close to 5% plus, whatever Russia publishes, if you accept the data. Also, consumption is significantly impacted, due to lack of availability of certain goods and movement of goods because of the war situation. So it is now faced with, notwithstanding the oil trades, notwithstanding the rare earth trades, notwithstanding the LNG trades, Russia is facing some headwinds, and it's trying to figure out what's the best way to exit this war and move towards a better economic management of its country. Next. With the Ukraine war drawing to a close, Russia is contemplating a return to dollar trade. These documents accessed by Bloomberg, documents accessed by Reuters, point to a 7-area joint economic cooperation alignment between President Trump and President Putin, who met, and they said, what are the areas that we can try to kind of collaborate? These are discussions that now is formally and officially reported based on the insights and research that both Reuters and Bloomberg have conducted. One is obviously fossil fuels, second is natural gas, third is offshore oil, and the other is critical raw materials. The proposal outlines what we call energy first joint strategy centered on collaboration in natural gas, offshore oil exploration, and coordinated control of palladium and nickel, which United States badly needs for its defense and manufacturing industry. So what United States is saying, come back to dollar trade, we'll give you access to SWIFT, and we will also create access to our markets for you to raise capital so that there is joint collaboration work, very similar to what they're trying to do in Venezuela in terms of retooling your whole energy commodity infrastructure. So we should rule the energy commodity and raw materials trade and the US dollar ruble position. This is the proposal, or this is the icing that is being placed on the cake for Russia to comprehend or Russia to deal with. And based on all the indications, Russia is very keen to look at this and move the agenda subject to the conclusion of the Ukraine war. Next. What does this mean for the US industry? US industry wants to get back to fossil fuels, wants to get back and have access to Siberian oil fields. They want to have access to energy so that their capital can be deployed, and this is the energy industry, and significant profit pools can be created. And obviously in the exploration of new oil resources, and also for the exploration of the minerals, the rare earths, which is Russia, United States is hungry for. United States is doing deals with all countries which can give access, which gives access to this rare earths, which is needed very badly, and move away from China. What does this mean for Russia? Improved liquidity access, we covered this. Enhanced currency stability. The currency stability is a problem because it's significant asymmetric link towards the renminbi. Integration with global foreign exchange markets so that it can raise to meet its imports, the FX as is needed. and have more stability around its currency, which gives a further economic impetus, given its growth is only 1% in terms of forecast for FY26 and FY27. So next.
And that's it, sir. Thank you so much. And before we go to questions, we have a small request. Here is a video about Sengols. Let's take a look at that. The Sengol, an iconic emblem from India's profound history, stands as a timeless symbol of dharma, righteousness, and the sacred transfer of power. Rooted in ancient traditions, it guided rulers with wisdom and upheld the highest principles of justice. Let's go to questions now.
I have two of them.
Yes. Thank you, sir. Thank you for placing an order for so many Sengols. Viewers, it's been very magnanimous, Sridharji. And he has the non-container version, a non-enclosure version, and the enclosure version. And he has also been instrumental in getting a lot more from us. He's keeping us busy. Thank you so much, sir. All those of you, the enclosure now is fairly well done. We're not having any failures. And please feel free to make your orders for yourself, for your relatives, your friends, what have you. It's an excellent gifting item is all I would like to say. Let's go to questions now. The first question, Dilip Chanchani wants to know, does the winning party in Bangladesh have the blessings of the United States?
Shriji, you are the best person to answer this question, Shriji, with so many shows on Bangladesh elections.
Well, in my opinion, United States hedged its bets for both. It didn't matter whether Jamaat came to power or the BNP, and I think they also have quickly recognized the new government, the elections. That means both India and US have recognized it, but that doesn't mean that things are going to be normal. There will be always some hiccups. It's up to India and US to iron out some creases as far as their policy towards Bangladesh is concerned. And clearly, Bangladesh needs India's help to, be competitive again. We are going to do an analysis on their last 5-year economy, how they have done, and it will come up in the next couple of days to watch that. So I think that US probably will tweak it, and Sridharji will be there to tell us all about it. So whenever that happens, right now we don't have any idea.
Yeah.
James wants to know, is India being deliberately undermined and targeted by USA in Bangladesh backdoor trade?
No, I think that this whole thing. I'd done a private post and written an article. This whole situation of India-United States trade has been quite deliberately blown out of proportions, and there's a lot of myth and lot of disinformation, whether it is Russia, whether it is China, whether it is Pakistan, whether it is Bangladesh, whether it's all those people who are anti-India, and even from within India, people, going rah, rah, rah. India had a trade surplus of $45 billion before this deal. India today will have a trade surplus of $95 billion post this deal. Okay, post this deal, 95. That means India has jumped $55 billion annually, even without further trade expansion. So that's number one point. Number 2 point, that they again threw another myth, which is to say that there was some kind of a deal done whereby if cotton is imported from United States, Bangladesh will get a special trade privilege in the process for the same cloth that is exported or same material that's exported from India. It will cost somewhere between $3 to $7 as a result of this. That again has been blown out of that myth has been blown out directly by the trade minister, Mr. Piyush Goyal himself, which is to say all this propaganda doesn't. So therefore, there is no way by which India has been undermined. India's negotiators are extremely good, and a win-win situation has been created. And I think it's time people dispel and look at the data and look at the hard reality rather than coming up with these types of incorrect conclusions.
Thank you so much, sir. That brings us to a close of today's program. Please like, share, and subscribe to our channel. Sridhar ji will be back next Sunday, same time. Namaskar.
Namaskar. Thank you. Thank you all. Enjoy your week. Happy Shivratri.